As usually, we start with the euro dollar and see what has happened at the weekly chart. What are the main developments here? Well, you can see that the last week's candle is a bullish candle and it was rather big. Despite the fact that it tested levels above resistance line, which earlier used to be a support line, still it didn't manage to get above 100-week moving average, only above 50-week moving average, and at the opening of this week, we saw a significant gap to the downside. Area of 1.1120, 1.1140, this is 100-week moving average, still represent a significant resistance for the euro dollar. Here we have the daily chart in which we can analyze the pair in greater detail. And here I have weekly pivot point indicator. The weekly pivot point is located at 1.1072, and as long as the euro dollar is trading below this level, the prospects are for a decline, and levels to watch on the downside are at 1.10 and 108.66. Perhaps 109 level will be important on the way, but the market moves on the US election can be violent, so the main levels to watch are those I've mentioned. These are the weekly support levels. And euro's decline is the scenario we will get if Hillary Clinton wins the US election and US dollar strengthens. If Donald Trump surprisingly wins, then we'll get a jump to the upside, when the euro dollar will have power to overcome resistance line, which is in place since May 2016, and test higher levels of resistance at 1.1210, 1.1280, and probably even August highs in the area of 1.1370. All in all, we can see that on the daily chart, stochastic indicator shows that euro dollar is in the overbought area. Although I must admit that technical signals are a bit contradictory right now because of uncertainty and because of the fact that traders still don't know what will happen in the next few trading sessions.